ourselves for the record.
Good morning, everyone. Rosemary Budelis, designee for Police Commissioner Bratton.
Barry Dennis, SIS, consultant to the fund.
Dan Torelli, PBA.
Chris McGrath, PBA by invitation.
Bob Ganley, SBA, proxy for Ed Mullins.
Lou Turco, LBA, and I have a proxy for Roy Rector, CEA.
Kenny Sparks, DEA.
Sherry Chan, New York City, Office of the Actuary, present by invitation.
John Dorso, alternate trustee for the Controller of the City of Youth.
Scott Emstrom.
Susanna Vickers, designee for Controller Scott M. Stringer.
Scott Evans, Controller's Office by invitation.
John Adler, designee for Mayor Bill de Blasio and for Finance Commissioner Jacques Gina.
Bob Senskistad, Pension Fund by invitation.
Kevin Holleran, Pension Fund by invitation.
Asawati, report from Andy Wire,
Sandra Gale, Controller's Office by invitation.
Wesley Kalisic, Controller's Office by invitation.
Karen Bartlett, Controller's Office by invitation.
Robert Fang, URC Controller's Office by invitation.
Rebecca Young, Controller's Office by invitation. Tatiana Povitsky, Controller's Office by invitation.
Neil Messing, Controller's Office by invitation.
Alex Dernier, Comptroller's Office by invitation.
Brian Cook, Comptroller's Office by invitation.
Yvonne Nelson, Controller's Office by invitation. Christopher Pott, Controller's Office by invitation.
Chris A. from Florida.
Kevin Newton at Mayor Office, Benson Investments.
Emma Solis Cohen, Controller's Office by invitation.
Sarah Marshall, Controller's Office by invitation.
Allison Felicity, Controller's Office by invitation. Paxton Controller's Office by invitation.
Where Controller's Office by invitation.
James Holyoke, Controller's Office by invitation.
Andrew Torelli, Pension Fund College Intern by invitation.
Okay.
Mark
Sorry.
Marino, PBA by invitation.
Thank you, everyone. With that, I'll turn it over to Scott.
Okay, thanks very much. We are going to try to move quickly. Today we got a lot on our agenda, and I know you all are busy. If we can turn to the monthly handout, which is the flip book. Passing those out. We have some extras. There we go. Let's just go to page 25, set the stage. I'm sorry, John Dorse is unpacking them.
Oh, okay. It's fun. You can
Martin would have had all this stuff.
say hi. He's watching.
I'm sure he's watching.
That's a shot.
He's with Joe watching.
The operation just has gone to pot.
Anybody need,
Yes, we all do.
The joke is actually Martin's in
Yeah. It's probably on the beach in Greece.
Okay.
Okay. Thanks very much. Well, as you know, it's been a volatile summer in the markets. You can see on page 25 that volatility. This is the year-on-year, year-to-date returns. The white is the Russell 3000. The orange is the Morgan Stanley EFA, which is the developed international markets, and the yellow is the emerging markets. We are going to talk about May results, and as you can see, in May, things were just in midstream of deterioration in emerging markets, but things hadn't really started to go south in the developed world or in the U.S. markets at the end of May, and all these numbers you're going to look at. It's been a very volatile summer. You all have read all the fireworks in Greece. Our active managers are out there trying to take advantage of dislocations that happen in the markets in all of the various asset classes. When you look at the Greek situation overall, we have a very low exposure, direct exposure in our portfolio, a little larger exposure to the peripheral countries. Most observers feel that although this is a very stressful time for Europe, that they're not in immediate danger of having things spread to the peripheral countries. Italy, Spain, Portugal, the other weak nations economically in Europe. So we continue in Europe on the long-term path that we were on. The solution or partial solution that was agreed to just the other day is promising, subject to a lot of votes. We don't think it's going to matter longer term to the immediate economic prospects for the portfolio, although it will certainly help the euro and help Europe if they're able to find a way to keep Greece in the fold. The results have been a deterioration in the markets, some widening of the spreads in those peripheral nations, some of which are on their way back as we enter July. If you look at the portfolio itself on page 27, I'm sorry, it's the market numbers on page 27. You can see the S&P was up 1% for the month, small cap up about 2%. All the weakness was in the developed world. MSCI, EFA down 0.5%, and emerging markets down 4% during the month. You can also see down below when you look at treasuries, mortgages, investment grade, et cetera, that the bond market was falling off a little bit in May as yields were beginning to rise. To look at how this affected the portfolio directly, we can turn to page 29. You can see in the far left column, the portfolio is up 52 basis points, so a little over 0.5% during the month of May. 50 of that came from the domestic equity market in green, with the developed market and the emerging markets off. You can see even though the emerging market exposure is smaller than the developed market, it had a larger impact because it was down strongly during the month. Private equity was up, contributing 24 basis points, and you can see all other asset classes had a kind of marginal impact on the portfolio during the month. When you look at the policy weights and where we are, I sound like a broken record. It's because we're attempting to have a very consistent policy. We don't try to time the markets. We're not looking at our tactical insights and trying to figure out whether Europe is going to shoot up because of the Greece situation or weaken. Our active managers are within the confines of their assignments, but our asset allocation is to stay fairly neutral to the long-term asset allocation goals that you all have set. If you look on the left hand of the page, you can see all of the equity exposures right on the long-term policy weights. This is adjusted for the uncalled capital in the private part of the portfolio. On the right, you can see that we remain underweight long-term bonds, both inflation-linked and nominal, in blue and orange, or blue and purple, and overweight shorter-term bonds in gray. When you combine the shorter-term bonds with the long-term bonds, we're at about a Barclays Ag interest sensitivity. So our interest sensitivity or duration is similar to that of the overall market. Looking at the results, we want to turn to page 37. You look all the way at the bottom, you'll see that 52 basis points. That's the total portfolio with the policy benchmark up 56 basis points over the same period of time. These are monthly results. This is still gross of fees for public, net of fees for private. I showed you a mock-up of the net during the first quarter, and we're going to incorporate net of fees in both public and private into our formal State Street report starting with the June quarter. So when we come back to you in September, you'll see that in its full array. As you look down, I'm going to just do it quickly. You can study this afterwards, or if you have any questions. You can see that the places where we were off benchmark, even though we were a little under 4 basis points, as I said, under the benchmark for the month. A lot of the weakness came in equities, particularly small cap equities. We can talk in executive session about that. You've taken some actions already to correct some of this. We outperformed in the emerging markets area, so we didn't go down as far as emerging markets did. They had a very weak month. That's about all I have to say in terms of the general trends there. Be happy to take any questions before we move on to the next item on the agenda. Questions about pay?
Bill, I have one question. Do you have a preliminary number for the June 30th? How we ended the fiscal year in terms of the...
I don't. John, we've decided to wait until we have strong numbers there, final numbers before we publish that. There's a lot of focus on it, and rather than posting estimates and then having to make adjustments, we think it's better just to wait the extra couple weeks and have the firm numbers.
Okay, fair enough.
No other questions? Let's turn it to the next item on the agenda, which I believe is asset allocation, and I'll turn it to John Adler from the Mayor's Office.
Thank you. So this is on page 72 of the agenda book. I think that we're essentially proposing that we undertake a full asset allocation review. It's been 4 years since the fund did a full asset allocation review. It's standard practice for funds to regularly review their asset allocation. We think the time is right, given how much the markets have changed in the last 4 years, and the fact that at the time that we did the last asset allocation review, our assumed interest rate was still at 8%, and subsequently it was reduced to 7%. And that we need to make sure that our asset allocation is essentially up to date and well prepared to take on the challenges that are coming towards us in the market ahead. So, I think everybody has seen this already, and happy to answer any questions, or otherwise I will make a motion. Any questions? Okay, so motion to direct our general consultant under the supervision of the Chief Investment Officer with the assistance of BAM, Chief Actuary, and our asset class consultants to lead the Police Pension Fund Board in a full asset allocation review.
Do we have a second?
Second.
All in favor?
Aye. Great, thank you very much.
We will work closely with Barry and with Sherry, the actuary, to bring this about and come back to you. It's the most important thing that you do as a board in terms of the financial structure of the pension fund, and we'll work very closely with Barry and Sherry to bring you some proposals that we can talk about it very well.
Do you have any type of timeline on it or anything?
We're looking at doing this as fast as we can, Bob, within the next couple months. I am going to try to coordinate with not only Barry but with the other consultants that we use for the other boards. If we were to come out with vastly different asset allocations, that would be a problem in terms of managing your pension. I think that's highly unlikely. But we'll get the richness of all the consultants participating in the discussion. I'm hoping we can get that done in a couple of months' time. Barry and the other consultants do this, constantly for their clients, so they're very well ready to do it. It's more of an unusual thing for New York City, but it is a very important thing.
And all 5 funds are going to do that.
All 5 funds. Do we have any yet to vote on it? Or is this the last one?
This is the last one.
Yeah, all 5 funds are
I'm
doing
sorry?
They were the,
Last one's the roll?
yes, we've gone through the other boards
it.
as well.
It's standard procedure
Yeah.
to do it every couple
No,
of
it's
years.
good.
Let me just ask actually one question, which is that whether the trustees feel like it'd be useful to have Barry do an education session for us at our next meeting, which is in September, on sort of the basics of asset allocation review and what SIS's views are about the capital markets and so on. It's something we have done in some of the other funds, and seems like it would be useful, but I put it out to trustees to see if you guys feel like it would be useful.
Sure, I think it would be useful. I think it's a good idea.
And this is a this is a longer-term structural look. I mean, we won't be trying to torque the asset allocation based on, what we think the outlook is for the next year or two. It's really to just do a checkup and make sure that that portfolio that we keep rebalancing to is designed to do the right thing over the next 5, 10, 15 years.
So Barry, is that something we could do in September? Great. Thank you.
Okay, thanks very much, John, and thank you for the vote on that. Very important thing. We're going to move now to executive session unless there are other questions.
Motion.
Madam Chair.
Motion.
Second.
Okay, just 2 minutes to break down the cameras and